Hello and welcome. You are watching Ask PQ on Bloomberg Quint. I am Agarwala. If you got questions on equity, this show is perfect for you. Send your questions to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-454-04141 or mail us at askpq@bloombergquint.com. Just make sure you do add the AskPQ hashtag. Before we get in the individual queries, let's take a very quick look at the markets, which are trending marginally in the green as of now. The benchmarks are advancing by 0.2%, not too much to speak for, save for something like the Nifty 50 index and the Sensex too. But moving on to the banking index, where a bulk of your gains have come over the previous couple of weeks, this has been a continuation of the trend, so about 0.5% gains for this particular index as well. But what about your broader market indices? Again, moving largely in tandem with the benchmarks, with about 0.6% gains for the Midcap index and small cap index advancing by 0.75%. In terms of the big gainers on the indices, again, there has been a lot of traction in GAIL, up 2%, followed by Indiabulls Housing Finance and Vedanta. So some gainers out there. That would be followed by other gainers as well, such as NTPC. NTPC moving from strength to strength of late. Bajaj Finance and Reliance Industries, among others, which are also up and about. And in terms of losers, when it comes to the Nifty 50 index, Tech Mahindra is down 2.2%, followed by UPL and Infosys. So some weakness in the information technology as witnessed. Of course, TCS is also there in fray, and ITC along with Wipro. In fact, heavyweights like ITC and TCS are the ones, which is why we're seeing some sort of subduedness when it comes to the indices. Had it not been for some of these stocks, we'd have likely seen some more gains come through. On that note, let's get in our experts for the day. We have Kalra of Target Investing and Aditya Agarwala of Yes Securities, who are joining us to answer all your queries. Good afternoon. Thanks, guys, for joining us. Let's start off with a query from Vimal Kumar, and it's on BEML. BEML has been in traction of late, moving in and out of the F&O band even, but it's currently at around 983. Let's take a technical view, considering we haven't really seen whether or not it's towards the fundamental of the technical side. On the 1 month basis as well, if we can possibly take a look at BEML and how that was done, it's gained around 19%, largely in tandem with what we've seen in the mid-cap index. Aditya, how would you help Vimal?
I think stock is poised for another leg of up move. Post its move from 890 to about 1010, it's gone into consolidation. Once it breaks out of that consolidation, I guess stock is headed towards levels of 1100 also on the upside. I would recommend buy at current levels, or the gentleman who has it, hold on to it with the stop loss at 930 and wait for targets of 1100. I see easily coming in months.
Okay, so positive cues coming in as far as BEML is concerned. But moving on to a question on Capacite Infra. On YouTube, we have Akhil Reddy, who holds Capacite Infra at 415. What should I do? Please advise. Samir, do you track this one?
So they are job contractors for a lot of real estate companies in Bombay.
Right.
Mainly their Maharashtra is the biggest market. So I think over there, being a job contractor, your margins are always squeezed. And when these kind of cost pressures come in, every deadline is there, you get burdened on, and the receivables don't happen conversion into cash. So I think it's better to stay away.
Okay, better to stay away as far as Capacite Infra is concerned. Samir, the entry point is at 415. It's currently at around 225. You would say the move out?
He can make a switch to Oberoi Realty to make up for the loss. It won't make up for the full loss, but over the period you can benefit out of it.
Okay. Well, moving on to another question, and it's considering Samir spoken about Oberoi Realty. We have a question on YouTube from Sivakumar, who says, please suggest 5 mid-cap stocks for the long-term investment. Samir, we don't exactly need 5, but if you can even name about 2 or 3, that would suffice.
So let's take Petronet, then comes your IGL.
IGL.
So these two are connected, and then third maybe Yes Bank as of now.
Okay, so Yes Bank, Petronet, LNG, and IGL. These are three suggestions coming in for the long term in the, of course, as far as mid-caps are concerned. Moving on to a question on Indostar Capital. We have Siddharth Shah who wants a view on this. I'm going to take a technical view here. If we can actually pull up Indostar Capital, it doesn't seem like the most liquid stock, but it is certainly at, well, it's buzzing. It's at around 350 rupees per share. Aditya, what are the technicals telling you?
If I talk of liquidity, is as thin as 1,900 shares traded on the stock.
Right.
But having said that, stock is facing resistance around 360 to about 365. I would be more comfortable if the stock starts to trade above that level of 365. Then I would want to get into the stock, place a stop at 340 and look for targets, upside targets of 430. But at the moment, I would not get into the stock, wait for it to cross 365. If the gentleman already holds the stock, my recommendation will be to hold on with a stop at 335. If the stock takes out 335, exit the stock, because this is not one of those stocks which I would prefer purely because of the lack of liquidity.
Lack of liquidity. All right, fair enough. Moving on to a question. A problematic company perhaps, Syntek Plastics. We have Ritesh who holds Syntek Plastics at 40 rupees per share. Can I hold with a long-term view in mind? That's the question Ritesh wants to ask. And of course, the stock is halved. It's currently at around 20. Samir, would you recommend an exit?
Yeah, it's better to exit and take a further loss or wait for the time.
Yeah.
I think you can replace it with a better mid cap or a large cap to recover the loss on that.
Right. All right, fair enough. That's your view coming in on Syntek Plastics. And moving on to a question on Berger Paints. We have Virat who holds Berger Paints at 311. What should I do? I'm going to take another fundamental view here because we have some volatility in crude of late. And while Asian Paints is, of course, there's been a lot of movement. Berger Paints is something that's also up and about in today's day of trade. At 320, how does this look to you, Samir?
So it is a good company, but it faces capacity issues. I think Kansai or Asian Paints is a much better space to be in that.
Yeah.
Because it has to do with a lot of pricing issues. And we see crude going up, which is a raw material impact to them. And over there, pricing is more important. So either shift to Asian Paints, most likely.
All right.
Otherwise, Kansai.
Okay. Let's move on and talk about Mangalore Refinery then. We have a question from Nishita. And well, she's entered Mangalore Refinery at 84 rupees per share. Let's take a look at where it is currently. I'll take the next part of that question later on Suven Life Sciences. But let's address Mangalore Refinery right at the top and bring up, okay, so it's currently at 74. 10 rupees off the entry price for Nishita. What would you do with this one, Aditya?
Just a sec.
And in the meantime, if we can actually pull up a 1 month chart as well for MRPL and see how that one's trading. Okay, that's the 12 months view. It's lost as much as 33%. But Aditya?
Stock seems to have been forming a bottom. It has made a double bottom at 61 levels, and from there it has bounced back. I would recommend hold on to the stock, place a stop at 69. That is a decent support for the stock at the moment. I would be more comfortable if the stock crosses 76 on the upside, then definitely stock is headed towards 85. Looking at the chart structure, longer term time frame chart structure, I would recommend hold on to it with a stop at 69.
Okay.
I'll add something. Sorry, I'm
absolutely,
cutting
yes.
So MRPL has a likely chance to get merged with HPCL.
Right.
So that can be another motive to hold on to the stock.
Hold on to the stock. Okay. So Nishita, well, you have a fundamental and a technical view on MRPL. The other requirement here was on Suven Life Sciences, where we needed a technical view here. Nishita has entered Suven Life Sciences at 250 rupees per share, and her question is if she can hold. It's currently at 265, so clearly sitting on a little bit of a profit, but more legs to this profit, Aditya?
Definitely. I would recommend hold on to the stock. I'll place a target at 290. She can place a stop somewhere around 245 and ride the trend. If the stock crosses 290, I see further upside to levels of 320. So there's good bullishness that I see on the charts. My recommendation is hold on.
All right. Well, moving on to the question from, Karthik. He says, can I invest in Westlife development? Quick service restaurants are expected to grow in the next decade. Is there any other QSR stock for investment. Okay, so let me just recap the news in the latest as far as something like Domino's is concerned, or its parent company Jubilant FoodWorks, or the one which runs Domino's. They've entered into a Chinese cuisine QSR as well, and there have been a lot of reports that at least at this point in time the move seems to be a positive one, but it'll all come down to the long-term store expansion and the capital expenditure required as far as Jubilant FoodWorks goes. In comparison, Westlife Development has been holding its own in terms of same-store sales growth, and of course this is how you've seen the movement of both these stocks, and they largely moved in tandem over the last 12 months, with a 24% gain for Jubilant FoodWorks, Westlife Development at gaining at 34%. The question here is on Westlife Development specifically. Perhaps the other one here is Jubilant FoodWorks. So what would you advise, Karthik, Samir?
I would advise keep with Jubilant FoodWorks. Don't invest the whole amount as of now.
Yeah.
Because it's turning to be at a higher valuations, though it always trades at that.
Right.
They are doing it replication in Bangladesh, which initial response is that has been fantastic.
Right.
So they can grow really well over there. That's what Chinese may work out, won't work out, but yeah, they'll be very selective on the capital outgo on that, because they've learned from Dunkin' Donuts.
Right.
So I think the cash flows are really healthy out here. There might be another good amount of upside left in the stock for us in next 2 to 3 years. But yeah, you can do a SIP or do a part investment slowly into that stock.
Okay. Well, there you have it. Well, moving on to a question from Vignesh. It's a 1 month target on Reliance Power. Well, I would say it's a relatively risky stock to get into, considering it's from the ADAG pack. And Reliance Power, it's okay, so it's at 10.65. And it's up at around 1.9%, but that really is inconsequential because we are usually used to this stock showing some very sharp movements. Currently about 10.65, 10.7. On a 1 month basis, actually moved up to the levels of 12.75 and then come off back to the levels, current levels. Anything out here, Aditya?
Yes, I see a downside target of 8 rupees 70 paise.
Okay, all right, fair enough. So that's your 1 month target. You may as well short instead of buying into Reliance Power. Abhinash wants a fundamental view on Jamna Auto, Samir.
I would stay away from auto banks, especially because the production cuts impact them first, and then the OEM actually, if it keeps on going like this. So I think wait for auto banks to correct even further. So then over there you can see a Motherson Sumi or a JTKT rather than going other.
All right, okay. Let's move on and talk about Indiabulls Housing Finance. We need a short-term view here, so I'm going to take a technical check. And Dilip wants to know what to do with Indiabulls Housing Finance. If I'm looking at the charts here and the way it's moved, this is of course an intraday move, is up 2%. But we've seen a largely fairly range-bound trade over the month through to the last part of March. Currently at 727, what would your advice be, Aditya?
I won't be too surprised if the stock actually moves up from current levels. I see good strong support around 700 zone. Stock is, as you've mentioned, is consolidating post a sharp correction that we've seen. So it's more of a sideways consolidation that the stock is witnessing at the moment. The moment stock breaks out of this upper end of the consolidation range, which is 750, I would suggest stock can see sharp up move to levels of 900 as well.
Okay.
I won't rule that out. 850 to 900 is the next level that I would watch out for. So currently, looking at the current chart setup, 700 is a good strong support for the stock. 750 is a resistance. If that is taken out, I would see an upside target of 850, 900. So I'm a little bullish on the stock as far as the chart patterns are concerned.
Okay. All right. Well, on Facebook, we have Kalim Khan, who says he wants a view on Jubilant FoodWorks. And well, Samir is, of course, positive and he prefers that to Westlife Development at this point in time. But he also insists that you invest in the company in a staggered manner, not necessarily put all, your allocations towards that in just one go. And moving on to a question from Ramanuj. He wants an outlook on the IT sector as a whole in the long term, and if possible, a view on Infosys. Okay, Samir, let me come to you on this one. How are you viewing the sector, and What about Infosys?
So IT sector is divided into two parts. One is the large caps.
Yeah.
Okay. When you go to the large caps, you don't expect a capital appreciation on the investment too much.
Yeah.
You should expect now more of cashbacks.
Sure.
That means buybacks, dividends.
Of course.
So you'll receive more cash payout rather than the capital appreciation. Capital appreciation is mainly dependent on flows. Okay, because institutional flows go to large cap IT.
Right.
Where we prefer even our money going in.
Yeah.
Mid cap, we only prefer Persistent or Tata Elxsi.
Okay.
Over there, Tata Elxsi is our preferred bet because over there, if you see, they're not totally into the IT systems.
Correct.
They're
yes.
more into the tech part of it.
Right. Right.
And that's more auto tech as well. So I think over there, that's a future. And that's where things will get more exciting. And they already have a bigger client like a JLR and Tata Motors in them.
Correct.
So I think they are ready for that kind of upgrowth, and the valuations are suppressed right now. So I think he can go with the Tata Elxsi or a Infosys or TCS.
Okay, there you have it. That's your view on the IT sector. The preference towards Tata Elxsi specifically in this case. And okay, so we move on to the next question. And all right, I'm actually looking for, all right, okay. We have a question from Vibham, and this one is a view on MRF. Let's bring up MRF. It's not every day that we talk about MRF in general, but it's at around 56,130. Well, I would reckon this is not a stock that retail investors, Aditya, would venture into. But still, if you could hazard a view here.
Definitely. So my sense is there is a corrective wave that we're witnessing in the stock from the peaks of 78,000. Stock has seen one-way decline, and I still feel that the decline is not yet completed. It's on the process of completion. On the downside, 71,800 happens to be a strong support for the stock. So I would be more comfortable in accumulating the stock around levels of 53,000 to about 51,200.
All right.
That is the support zone, not at current levels, because it's going through some correction, and the correction is not yet over.
Okay. We have one more for you, Aditya. It's on HCFC AMC. I'm sure it's recently listed, so you may not have as much back data, but we have Prashant Rane who wants a 3-month view here. What do you make of HCFC AMC?
So definitely post a move from levels of 1300 to 1500, stock is now entered into a narrow consolidation, and the move was backed by good decent volumes. So I would recommend hold on to the stock. If he's looking to get into the stock, look at corrections to levels of 1450 to about 1440 to take a fresh entry into the stock. I would place a stop somewhere around 1390 on the downside and look at an upside target of about 1700 in the stock.
Okay. All right. We're moving on to a stock, an FMCG stock, which has been a tad under pressure. That's Godrej Consumer Products. We want a fundamental view here. We have Karthikeyan, who was asking for Godrej Consumer Products. Of course, we all know about certain margin pressures and some volatility in markets abroad for Godrej Consumer Products. But Samir, how are you placed here and in comparison to perhaps the rest of the sector?
So I think this company is based on acquisitions.
Okay.
The moment it stops doing that, there's a staggered or a degrowth which comes into numbers.
Right.
The margins get suppressed. Domestically, they're facing a lot of competition. So there are a lot of moving parts which are going against the upside of this kind of a company, which is at a good brand, good group. So I think it's a better move to shift to a Marico or a Dabur as of now.
Okay.
Because the products are somewhere competitive enough in nature.
Right.
And the valuations are higher.
Yeah.
But I think if you do it in a staggered way, you'll profit more further over there rather than here.
Okay, fair enough. That's your view on Godrej Consumer Products, and as Samir suggested, he'd prefer staggered investments in Marico and Dabur, and not necessarily Godrej Consumer Products. But moving on to a technical view on central bank. Chandra wants to know if central bank can be bought at current levels. Would you buy it?
No, not at all. There are better PSUs. I would look to get into either a SBIN or a Syndicate Bank For me, those are better plays, or a Canara Bank for that matter. These three are top bets. I would not get into central bank. Look at stocks which actually are coming off pretty sharp from the lows, not the ones which are still sitting close to about 52-week lows.
Okay, we actually have a query on Syndicate Bank as well, so let's take that one too. It's on Satya. Need an entry price for Syndicate Bank.
So I believe one can get into Syndicate Bank at current levels, place a stop at 37.5 and look for an upside target of 43.
All right. Okay, and a fundamental view on Bhansali Engineering products. This one is a query we keep getting, okay, Samir.
So they do chemical products.
Yes.
They had a case in I think Bombay High Court or somewhere, and they won that case, and promoters started buying in this. I'm talking about 2017.
Right.
And promoters started buying in the open market.
Right.
That's where the fundamentals of this company for next 4 quarters changed. But what has happened now, that's in the base.
Right.
So now the stock price and the fundamentals are not looking that great.
Right.
So I think on the quarter-on-quarter basis and YOY basis, they have a problem. If you're not invested, don't get invested at this point.
Right.
If you are invested, I think the best place to exit is any kind of a bounce.
All right. Okay, well, moving on to another question, an interesting sector of late, Samir. This one is back to you on the hotel sector. We have Harita, who wants a two-year view on Indian hotels. We've seen a lot of traction in Lemon Tree hotels for one. What's your view on the sector and Indian hotels specifically?
So I think what has happened in past couple of years, there hasn't been a serious addition to the sector. So now that kind of a capacity issue is kicking in.
Right. Okay.
Especially when with the Oyo and other start coming in.
Correct.
So I think that capacity issue is creating room for price hikes and having a better average occupancy also. So I think over there you're getting a benefit out of it. Indian hotels is best place to get benefit out of it, and especially when the new management has come in and there is a kind of a restructuring of the business and how they want to work with.
All right.
And other one is the EIH Associates, that's
right.
the Oberoi. Over there, Delhi property is the main income for them, and that was under construction for 2.5 years. Now that is running. So the numbers are showing that kind of improvement as well. So I think another 2 quarters or 3 quarters, EIH and Indian hotels will be best placed.
Okay, all right. Well, there you have it. Well, moving on to a question on Vaik Engineering. We have a question from Naresh, who holds Vaik Engineering at 961. The other question is on Hickel. I'll come to that, but let's talk about Vaik Engineering first at 961. Again, not something which looks like it's very liquid. It's currently at 597. Aditya, your view here?
So we've seen a one-way decline in the stock from about 1180 levels to about sub 600 levels, and now it's bounced back to 600. I wouldn't recommend to get into the stock. Probably stay away from the stock. If somebody already has the stock, place a stop at 590. If it breaks 590, my only suggestion will be to exit, even though you would be incurring a huge loss. I don't know where he's bought it.
Yeah, he's bought it at 961, so it's not much of a loss to take 7 more points. But you recommend exit is
yes.
Okay, and the other one is on Hickel, which has been bought at 194. Let's pull up Hickel as well and take a look at how it's done, perhaps through the course of the last few months, or for that matter, the last 1 year. It's currently at 163. So in this case, the loss is not as significant. It's up 6% in the 1 month. What's your view?
What I'm looking at is it is facing stiff resistance around 175 to 176.
Yeah.
It has made multiple attempts to cross those levels, but it has failed to do so. So definitely, if it crosses those levels of 175, 176, there'll be a momentum build up in the stock, and then stock can head to levels of 200. At the moment, it is still facing resistance around 176. I would suggest put a stop at 160 or 155. That's a good support zone between 155 to 160.
Right.
And see if the stock starts to trade above 176, then definitely stock can head to levels of 190. But place a stop at 155. The stock starts to trade below 155. Get out of the trade.
All right. Okay, we have Freddie Povera, who wants views on Tata Steel, Yes Bank, and Ashok Leyland. So, Freddie, I can tell you that for Yes Bank, Samir is already positive. but I will take his views on Tata Steel and Ashok Leyland. We've already addressed Yes Bank. So Samir, if you can give your view on Tata Steel and Ashok Leyland.
So Tata Steel is not a right place to, steel sector is not a right place to play commodities, because globally you're seeing a slowdown. People are talking about the production cuts. That pushes prices only for a time being.
Okay.
That reverses at a point, and now it's happening to steel companies.
Right.
So I think stay away from steel companies. As far as Ashok Leyland is concerned, again I'm saying stay away from auto companies.
Right.
Auto companies, whatever you bought, you can hold on to. Wait for a lower level to add to it.
Right.
If you've not bought, stay away as of now, because there is a kind of a bigger slowdown coming in, and you have a norms changing in April 2020.
Right.
So there will be a further production cuts happening at all the ends.
Okay. All right. Well, keep an eye on all these factors, especially governing the auto sector, because not only are we already starting to see some production cuts, but as Samir has suggested, the change in norms as well could further deal in and lead into a more slowdown in the sector as a whole. But we've run out of time on the show, so I am going to take a moment to thank both our experts, Samir and Aditya, for helping our viewers with all their queries. That is all that we have on this edition of Ask PQ. But remember, we're just a tweet, a post, or a call away, so keep your queries coming in, and we promise to address all your queries on our shows. Also, all the previous episodes for you to have them check. They're on YouTube and our website, BloombergQuint.com. Stay tuned. Up next is Power Lunch. This is Bloomberg Quint.